They say to sell in May and go away, but really what they should say is sell in May and buy outlier stocks. Today we're going to be looking back at history. Should we run for the hills in May? Believe it or not, markets are very bumpy starting in May through October. We're going to go through that in a moment. However, some of the greatest compounders, and we're talking about growth stocks, have actually occurred during this period. So if you're going to sell the market, be my guest, but still look for great companies on sale. Let's get to it. Right on cue, we're starting to see that the month of May is having a lot of sell pressure on markets. You can see that in our data. The latest red sticks, those are a lot of stocks that are under pressure. And if you're wondering what is getting sold, it's regional banks. I'm sure you guys have heard the headlines. Banks are under a lot of pressure. Deposits, they're leaving the banks. They're going into money markets and these other interest yielding securities. That hurts banks. And ultimately, it is hurting the stock market. But what about history? What do we know about May? I did this awesome study looking at pre-presidential election years. That's what 2023 is. Going back to 1979, if you look at the returns from May through October, so that's 6 months, you can see that the average return for the S&P 500 is a meager 1.7%. Now keep in mind, the average annual return for the S&P 500 going back nearly 100 years is roughly 10%. So to get a return of 1.7% over half a year, it's telling you that stocks are facing pressure during these periods. But what about election years? Well, since 1980, the average return for the S&P during election years, again, it underperforms the average with a gain of 5.8%. Now there is a caveat here. There were two outlier years. 2000, you remember, we had the big tech wreck, recession. 2008 was the global financial crisis. The S&P was down 38%. That is two of the main reasons of the low average for the market. But should we sell in May and go away? Actually, the answer is no, because two of the biggest generational stocks have occurred during these periods. The first one I want to show you is NVIDIA Corporation. This is ticker NVDA. I started this chart from May of 2015. Okay, so this is a pre-election year. This is exactly when we started to see unusual institutional buying in NVIDIA in our research. So these proprietary signals, they look for stocks that are under heavy institutional accumulation and they exhibit forward earnings growth and revenue growth. That's what these blue bars indicate. And if you sold in May, you potentially missed out on some of the biggest winning stock of our generation. You can't even tell this, but NVIDIA was basically a $5 stock back then. What other stocks have we seen? Another semiconductor name is SolarEdge Technology. This is ticker SEDG. Going back, we look at May of 2019. Again, another pre-election year kicked off. A very, very strong start for this stock. And look, nobody really knew about this stock. I know once it was showing up in our research, I didn't know much about it either. But continual accumulation usually sets these stocks up for further gains. And you can see dozens of top 20 appearances. So what is the bottom line? The bottom line is, look, if you're going to sell in May, go ahead and be my guest, but don't stop hunting for awesome stocks. They are there under the surface. Map Signals helps you find them. Remember, none of this is personalized advice of any kind. Make sure you do your own research and always look for awesome businesses. I will see you next time.